Hello and welcome to Business Incorporated. I'm Temple Ashaju. Coming up on the show today, South Africa's decline in factory activity halts in August. Egypt's economy grew 3.5% in 2019 to 2020 fiscal year. And Ethiopia joins the Center for Agriculture and Bioscience International. We begin the show now with intraday market numbers coming from Africa, which were of course mixed. Nigeria's NSE sustained its positive momentum and rose some 0.16%, while the JSE in South Africa declined by 0.37%. The market in Egypt closed for the week negative on Thursday, while Kenya ended Thursday's session positive. Now, markets in the Gulf region closed the week positive on Thursday, with Dubai's main index jumping the most by 1.02%, while the Abu Dhabi index added 0.11%. Elsewhere in the region, Saudi Arabia's index rose 0.40%, while the Qatari index advanced by 0.25%. And European stocks edged higher Friday morning, looking to shrug off uncertainty fueled by Wall Street's tech sell-offs, with banks dragging the major indices into the positive territory. Now let's talk to Chelsea Delani for more. Hi, Chelsea. So global stocks are under pressure today after a dramatic sell-off that we've seen in the U.S. market, and that's, of course, been led by the tech stocks. Is this the beginning of a longer-term sell-off?
Well, today we have seen a bit of a stabilization here in European markets, and U.S. markets also seem to be stabilizing. That's after Asian stocks had also declined following the big rout in U.S. stocks. So it does seem that investors are taking a breather after the big sell-off yesterday. But from what investors are saying is this is really a wake-up call for everyone in the market that stocks had gotten really overvalued over the past couple of months, particularly these big tech stocks that had run up so much since the summer. So we have the NASDAQ, even before yesterday's decline, up over 70%. Apple had risen more than 100%. Tesla had risen about 500%. And even though these companies, particularly tech companies, are managing the pandemic quite well, these values were just completely disconnected from reality. So this was a bit of a gut check for a lot of investors, and a reminder that there's still a lot of risks to the global economic outlook, including all of the questions that remain over the course of the virus and the prospects for a vaccine. Many investors have been basically pinning all their hopes that we will have a vaccine by the end of the year. We are getting to the point where we're going to start seeing if that's going to be possible, and we also have the U.S. election coming up. So there's a lot of risks ahead, and that's likely to lead to more volatility.
Right, Chelsea, just minutes ago, the United States released its latest jobs data for the month of August. What are you learning about this report?
So this is actually a much better than expected report. The headline numbers, so the number of jobs added, was about 1.4 million. That's about what was expected. It is a slowdown from recent months. It's the lowest number of jobs added since April, but we did see the unemployment rate drop to 8.4%. That's much lower than economists had been expecting, and other things like labor force participation and wages also rose. So it does indicate that the U.S. economy, the U.S. labor market continues to heal, but it will be slow. This is a slowdown from the growth that we've seen in recent months, and there's still about 30 million people in the U.S. who are depending on jobless benefits. So now that we have seen the big bounce back as the economy reopened, it will likely be more moderate going forward.
Right. A group of 100 EU lawmakers on Friday called for sanctions against Russia after the poisoning of an opposition politician. But what are the EU politicians now demanding, and what will that mean for the ties with Russia?
So there are a lot of different opinions among EU leaders right now. Some, including Chancellor Merkel here in Germany, are saying we need to wait and see what the investigation into the poisoning of Alexei Navalny shows. A lot of people believe that this is in some way linked to Russia. Russia has adamantly denied that and said that there is no evidence that they were behind this poisoning. So on the one hand, you do have some leaders saying we need to take a second and wait, but you have others, including 100 EU parliamentarians today, saying we need to think about economic sanctions against Russia or canceling this massive gas pipeline, Nord Stream 2, that's supposed to be being completed sometime soon and would really link Germany, the EU, and Russia even closer. So that would all be quite devastating for the Russian economy, which has already had sanctions imposed on it since 2014. If there are more sanctions, that would really hurt Russia economically, and we have seen that fear reflected in the markets. We've seen the ruble sell off, we've seen Russian stocks sell off, so investors are certainly a little bit anxious about what could come ahead.
All right, Chelsea, thank you so much for your input on the program, and do stay safe. Let's cross over to our London studio, where my colleague Juliana Olayinka is standing by to give us some updates. Juliana, thank you so much, and good afternoon to you. Well, we know that Michael Sanders, a member of the Bank of England's MPC, says the bank may have overestimated the strength of the UK's recovery from the depths of the coronavirus pandemic recession. And of course, he believes that the Bank of England will need more momentary stimulus to boost growth. But what does Sanders actually mean?
Oh, what he means is we need more stimulus, really. I think the elephant in the room, Temple, is the unemployment. Everybody's talking about the unemployment, and that's because, of course, the furlough scheme is coming to an end. Just this month, employers had to pay, contribute to national insurance and pensions. They hadn't been doing so before. And they also have to prove that they're topping up the government's 70% to 80% of these wages. And I think really the traders here in London had a whiff of more fiscal stimulus, because the Bank of England have been speaking to MPs throughout this week. It began on Tuesday in front of the Treasury Select Committee. And I think, you know, this is the closest that we're going to get. So what we're going to expect is the government's bond buying programme, which they've already increased by about £300 billion in the past 5 months, to increase even more. We're not expecting negative interest rates or interest rates to be lower than the historic low it's at the moment.
Wow, that's some quantitative easing there. Well, the Road Haulage Association says the UK is sleepwalking into a disaster over its border plans for the end of the Brexit transition. But any idea what systems the government is now putting in place over the border plans?
Unfortunately, we don't have any idea. The majority of the discussions taking place in Britain at the moment, of course, are about COVID, although Brexit is just around the corner. And by the way, Britain have actually left the European Union. They left on the 31st of January, but we're now in this transition period where Brussels and Downing Street are trying to secure a deal. If there is no deal, we come crashing out and we go back to World Trade Organization standards. So before December the 31st, there is so much that needs to be sorted out, which is one of the reasons why Brussels was so keen to try and convince Boris Johnson to postpone the transition or extend the transition period beyond this year. You know, Boris Johnson said no way, and therein lies the problem. We have been hearing from lots of organisations, particularly this Road Haulage Association, which represents truck drivers. They've been written to a senior MP called Michael Gove, and they've said that nothing is in place at the border, that it's going to take a lot of money, it's going to have to take a lot of the government's attention and focus to make sure that those supply chains that Britain so heavily rely upon when it comes to the EU can still take place with ease, such as food, medicine, and so many other issues. So their three key points were the IT system, retraining customs agents, and building infrastructure. Now, the Transport Secretary, Grant Shapps, has replied publicly, and he did say that they are working, the government are working to ensure that the system's in place in due time.
All right, Juliana, how are the markets performing at intraday right now, and what numbers are crunching better in favor of traders today?
Oh, that's a tricky question. I'll give you the numbers. The all share is up 0.68%. The FTSE 100 is up 0.65%. And the FTSE 250 is up 0.91%. In currencies, the pound is unchanged against the dollar and the euro, and it's down against the Japanese yen by 0.03%. We did have a bit of breaking news before I stepped into the studio, and that is about Virgin Atlantic. Of course, they've been going through their £1.2 billion restructuring deal, and they've just announced that part of that restructuring will include the loss of 1,100 jobs. So Virgin Atlantic, the major airline, have just announced that 1,100 jobs will be going as part of that restructuring deal.
Thank you so much for all of these updates coming from you in London, Juliana Olayinka. Appreciate it, and do have a lovely weekend. Let's chew more numbers now and go over to Asia Pacific, where stocks were lower on Friday following Wall Street's sharp declines overnight. Australia led losses among the major markets regionally, with the ASX 200 declining by 3.06% on the day to 5,925.50. Mainland Chinese stocks also closed lower as the Shanghai Composite dropped some 0.87%. The Shenzhen component declined by 0.84%, while Hong Kong's Hang Seng Index slipped by 1.24% as of its final hour of trading today. Now, the Kospi in South Korea dropped by 1.15% on the day to 2,368.25, while Japan's Nikkei 225 declined by 1.11%, and the Topix Index shed 0.9% to finish its trading day. U.S. stocks futures reversed earlier losses in choppy trade Friday, bucking the downside momentum from the regular trading session. We know the Dow Jones Industrial Average futures flipped into the green to rise by 100 points. Now, the S&P 500 futures were also in the positive territory, while the Nasdaq 100 traded negative. And shares of major tech companies declined in after-hours trading, although they were around their lows for the day. Now, Ethiopia has joined the Center for Agriculture and Bioscience International, CABI, becoming its 50th member. Now, the Eastern African country will enjoy a range of benefits, including inputs into CABI's global development agenda, links to its international network of partners, as well as regular consultations to address members' needs. Dr. Trevor Nichols, CEO of CABI, confirmed signature of the UN-level treaty on CABI International by the government of Ethiopia to bring the country into membership of CABI. Other benefits of membership with CABI includes voting rights at CABI review conferences and executive council meetings, as well as access to CABI's broad range of products, services, programs, and project deliveries, as well as capacity building activities. And Egypt's economy grew by 3.5% in the 2019 to 2020 fiscal year that ended on the June the 30th, down from an initial projection of 3.8%. Now, the economy has been boosted in recent years by an upswing in tourism, strong remittances from the Egyptian workers abroad, and recently discovered natural gas fields coming on stream. Egypt expects the economy to grow by 3.5% in the 2020 to 2021 fiscal year, which started in July, but also projects a lower growth of 2% if the coronavirus pandemic drags on till year end. We'll turn to our focus on South Africa's economy when we return from this short break. Do stay with us. Welcome back to Business Incorporated. We'll head over now to South Africa, where private sector activity contracted for the 16th straight month in August, although at a slower rate as COVID-19 restrictions continue to halt demand. The IHS Markit Purchasing Managers Index edged up to 45.3 reading in August from 44.9, staying below the 50 threshold mark that separates expansion from the contraction. Of course, private sector activity has not grown in South Africa since April 2019, underscoring the weakness of the economy even before the pandemic struck in March. And joining us now to talk more about the PMI numbers from South Africa, as well as other developments that we have in the Southern African country, is Shepo Kadima, an economic analyst in that country. Thank you for joining us on the program.
Thank you, and greetings to the viewers of Channels TV.
I appreciate that. Thank you. So, South Africa's PMI rose to 45.3 reading in the month of August. But what does this tell you about economic recovery?
Well, we have to read that in context, that it is a month-on-month comparison, and it is in line with the relaxation of the lockdown measures when we moved from level 4 to level 3 and then to level 2 now. However, we have to bear this in mind that South Africa has effectively deindustrialized. There is minimal manufacturing capacity in the country as a result of the, I would say perhaps maybe an unconscious policy of deindustrialization. So the numbers that I think are going to be even more significant beyond the PMI index is going to be the jobs numbers, the inflation, and of course, as well as the retail numbers. We have to bear in mind that South Africa, by and large, it is dependent on the consumer, on consumer spending. So the retail numbers are going to be watched very closely, taking into account more so the number of retailers that have been closing down pre and during the period of the lockdown due to COVID restrictions.
So on Wednesday, the Auditor General said some of the money in South Africa's 500 billion rand COVID-19 relief fund may have been fraudulently paid to improper beneficiaries. Already we know that there's been some sanctions, but of course, what do you make of this particular development?
Well, that is not surprising at all. And in fact, the viewers would be pleased to know that I did state that earlier on Channels TV, that the 200 billion rand relief package from the banks, together with the 130 billion rand of reprioritized spending from the various other players, was going to be misappropriated. And it is therefore not surprising that that indeed has been the case. It has been misappropriated. So the Auditor General's findings are not surprising at all, were indeed expected. The question that I think many people are now asking is, will there be any arrests beyond perhaps maybe the rhetoric and the public relations offensive that has come from the government? Because of the 130 billion rand that was spent, which was reprioritized spending, it had a direct impact on social spending needs of the country, and also has exacerbated the level of unemployment and poverty, because in terms of, instead of it being relief to the hard-pressed majority who are poor, it has unfortunately been misappropriated. But as I say, not surprising, because I did state that earlier on Channels TV after all.
Right, so we understand that the troubled state power utility Eskom has failed to meet all conditions of the 49 billion rand bailouts to help it cover its debt payments. What's next for this particular company?
Well, in fact, it imperils the whole of South Africa. We have to bear this in mind. The likelihood of a debt default by Eskom, because it has got sovereign credit guarantee from the state, it's therefore going to effectively be affecting all other state-owned entities. So this is something that could not have come at the most unenviable time. But it is not surprising. We have to bear this in mind. Right now, as I'm talking to you, South Africa is going through yet another rolling blackouts that they are called load shedding. So every day that we are having this scale of load shedding, South Africa's utility Eskom loses in the order of $4 billion US, $4 million US in terms of lost revenue from load shedding. So that means that the cash flows of this utility are impacted negatively, and hence it is not able to even service the debt obligations. But also the conditions that were imposed by National Treasury on Eskom, it was not expected that they could have met those. For example, one of the conditions is that Eskom needed to have sold off its housing finance or Eskom finance company. But the question becomes, in this depressed climate, the mergers and acquisitions environment has effectively dried up. The capital markets have dried up. So there wouldn't have been any one entity that would have been able to buy the Eskom finance company. And that being attached as a condition, it is not surprising that Eskom could not meet that condition. But I think very fundamental is the fact that Eskom is simply on a perilous road. I cannot see how it will be able to come out. Its debt has spiraled from 450 billion rand at the beginning of this year. It now has spiraled up to 488 billion rand. So there is no hope that Eskom can, after all, be able to see its way clear, more so because it is dependent on tariff increases. And the tariff increases, the talk is that it will go up 25%. If it goes up 25%, the tariff increase, there is certainly no way that this economy can afford a 25% electricity tariff increases.
All right, Sheriff, I can tell you that is a similar challenge that we're actually facing right here in Nigeria. And of course, we just do hope that there will be a respite sometimes in the future, because this whole hike in tariff is a major concern to the consumers. Shepo Kadima, thank you so much for your time on the program this afternoon. We appreciate it.
Great pleasure. Thank you.
Great. So still staying with South Africa, where we see a negative outlook on the FTSE JSE Africa all-share index. It's failed to hold gains and dropped slightly by 0.04% to 54,502 points in mid-morning trade this Friday. And on Thursday, the South African rand appreciated by more than 0.5% to close higher than 16 rand per dollar. And of course, a number of earnings have been released. But let's talk quickly to Makwe Masilela, the Chief Investment Officer at Makwe Fund Managers, for more on these particular developments. Thank you for joining us on the show. So, Statistics South Africa will release GDP figures for Q2 2020. What are you expecting?
We don't expect any good number as well. We expect that we're going to continue to see our GDP contracting. Remember, South Africa has been struggling even before COVID-19 affected us. We've been also been downgraded. The economy was already in a recession. But if you look at your mining numbers, if you look at your manufacturing numbers, are not too convincing. And those are the sectors that accounts for almost 20% of our economy. So we still expect to see our GDP not doing that well. And anyway, that will also be in line what is happening with the GDPs of other countries, especially our major trading partners, because they continue to struggle. But of concern is, going forward, are we still going to be continuing to struggle, or will the government implement all the necessary measures to make sure that at least we get to recover even after COVID-19?
And of course, the all-share index rebounded by as much as 1.7% on Tuesday, and the rand appreciated more than 0.5% on Thursday. That's yesterday. What are we likely to see next week?
I think what's going to drive our market, what's going to be happening with the job numbers that we'll be getting today. But so far, the theme has been very negative, as we've seen that markets are starting to pull down, because we've seen sectors that have been going up, but people started to doubt their valuations. So generally, people will be looking at any developments when it comes to vaccine, any developments when it comes to geopolitical tensions. But company results, I think people already know that so far the results are looking bad. And we need to remember that this is backward looking, so we don't expect to see any impressive results going forward. And yes, the banks will continue to struggle, and it's very important to know that when you see the banking sector struggling in your exchange, then that tells you that whatever rally that you might be seeing on that exchange is not going to be sustainable. And we've seen a big sell-off yesterday, and probably this continuing today as well.
Mr. Makwe Masilela, an investment officer at Makwe Fund Managers, thank you so much for your time on the program. And that's it on the program this afternoon. I'm Tempula Shaju. Thanks a great deal for being a part of it. Do have yourself a wonderful weekend. Bye for now.